Hello, I'm Brent Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management. And welcome to today's Smart Investing Daily Briefing. Well, today we're talking about the U.S. trade deficit. And most importantly, why should you care about this? Well, the reason being is that what the trade deficit is we're sending our money overseas to other countries, making them more wealthy, not making ourselves wealthy. Now, I don't want you to get excited and say, oh, we need to put tariffs on. That's not the case. We need to do better here. And also what needs to happen is we need to not have our dollar increase in value so much because that hurts our trade deficit. So it's all tied together. We're trying to simplify this very, very complex situation for you to give you a basic understanding of why we don't want a strong dollar and we want to increase our production here. Just to give you an example, Taiwan spent 2.4% of their GDP reducing their currency.
Yeah, and while we're kind of talking about trade and stuff, I do want to point out global trade is still a good thing. You're saying, yes. No, we're not giving our goods away to anyone or giving our money away. No, global trade is very important to the success of the global economy and really helps facilitate, other economies around the world. But, China is a great example of a country that has a huge trade surplus. As you can see, $366 billion in trade surplus for 2015. That's a ton of money coming in for them. And why is this? They do have one of the cheaper currencies out there and they manufacture a lot of goods. So we actually kind of take a lot of their goods and spend a lot of our money in China on those goods. And kind of one thing that did hurt us, you kind of spoke about this already, is the dollar increase in the second half of 2015. It was up 6.5%. Really makes our goods a lot less appealing and other countries' goods very appealing because they're cheaper. But the dollar has stabilized a little bit more in the first half of 2016. Not the first half, but so far this year.
Right, we kind of stabilized. And one thing, too, I've never forgotten from my college days was there's an economic theory known guns and butter. Can't explain it here, but look it up, guns and butter, and you'll understand more about what we should be doing. Let's talk about the company today, Office Depot. Reason why? Today down 7.2%, or 40.72%. Current price now $3.62. The high $9.39. The low right now $3.61. You can see on the graph here what happened. Let's talk about Office Depot. Well, they had a merger pending with Staples, and the judge denied it yesterday, late afternoon. Said nope, not going to do it. And this caused the stock to just fall apart. Everything was based on that merger. And I want to point out previous problems with locations. We owned Office Depot many years ago, and we always talk about understanding the business. And the mistake I made was not understanding that they were doing very well, but they were in two states, Florida and California. Now, the real estate market fell apart, so did they. So we always talk about understanding the business. I'm going to give you an example of what I learned from sharing it with you.
Just the importance of your wealth of knowledge over the course of your career. We're taking a look at the balance sheet. Debt to equity here, about 89%. Don't love to see that, especially when you're kind of looking at a company pre-merger. You want to make sure you like that company, not just buy it on the hopes of the merger. Current ratio here looks very attractive at 1.6. Like to see that. Now going out to December 2017, estimated earnings per share of 46 cents gives you a target sell price of $7.59. Now while you may be saying, wow, time to buy, there are so many questions surrounding this company right now. I think this number will change going forward as well. So a lot of concerns. I would kind of be patient with it, not jump in, because there's still going to be a lot more volatility, I believe.
Great advice. Let me ask you, are you worried about what you get on your return on your money? Maybe it's not what you thought it was. You're not happy with it. Maybe you're not happy about your current advisor. Well, that could mean it's time to give us a call here at Wilsey Asset Management. We've been managing money successfully for over 30 years.
Hey, you want to have a conversation with us? Phone number here is 858-546-4306, and we mean it. You can give us a call. We'd love to talk. Or you can contact us at our website, smartinvesting2000.com.